Thank you all for joining us for today's Lunch and Learn. I'm home. I'm Greg Berry, Assistant Director in the UAB Office of Alumni Affairs. Just a quick note, since we're virtual, don't be surprised if things may seem out of place or a technical issue pops up. If you experience any issues with your video or audio, please click the Reconnect button at the top of your screen. This will get you back to the webinar right away. Today's webinar is being recorded and will be uploaded onto our website either this afternoon or tomorrow. If you have any questions throughout the afternoon, please place them in the chat room. We'll have time for Q&A at the end of the presentation. Today's session is part of our ongoing Backpacks to Briefcases Evergreen program. This series has 4 events each year, 2 in the spring, 2 in the fall. Topics will focus on things like today, financial planning, personal branding, workplace skills, and personal life. Between each, there will be chances to take advantage of golden electives like a lunch and learn. So I misspoke just with the financial planning. We had that with Budgeting 101 with Leia's colleague a couple of weeks ago. These events, like a lunch and learn, will also include networking and volunteer opportunities. To receive your Evergreen certificate and your Evergreen lapel pin, you must complete all 4 Evergreen events and 2 golden electives. They don't have to happen during the same calendar year. Just jump on in, join us anytime you can. Young alumni and students are welcome to participate. You can find out more at alumni.uab.edu/backpacks. At the end of today's Lunch and Learn, I will highlight other upcoming opportunities for the Evergreen Certificate Program. Today, we are excited to welcome Leia Ragland. Leia is an Assistant Vice President of Marketing and Business Development at Legacy Credit Union here in the Birmingham area. She's also a Credit Union Certified Marketing Executive. In 2012, she graduated from the UAB College of Arts and Sciences. So at this time, I would like to turn things over to Leia. Welcome. Thank you so much for being part of our webinar program once again.
Hey, Greg, thank you so much for having me back. And I'm really excited to get to talk to everyone about first-time home ownership and kind of the do's and don'ts of jumping into that adventure. So what I want to first tell you is that you are the only person who truly knows whether you are at a point where it makes sense to purchase a home rather than rent. You should be able to answer some key questions that will help you determine what those next steps should be. I want to place these in your mind just so you can kind of be thinking about these things as we go through the presentation. But number 1 is, do you have a steady job? 2, have you been steadily employed for at least 2 or 3 years? 3, is your income reliable? 4, do I have a positive credit history with a good mix of debt? 5, have I saved for a down payment yet? And 6, ultimately, can I afford it? If you can answer these questions comfortably, the chances are that you are in good shape and you could potentially be ready to buy a home. I first want to kind of define what a first-time home buyer is. According to the U.S. Department of Housing and Urban Development, considers a person a first-time home buyer if they have not owned a home as a principal resident for at least the previous 3 years. So you could qualify if you've owned a home, but your spouse has not, and you maybe plan to buy together. Another scenario would be if you are a displaced homemaker who has only owned with their former spouse. And 3, if you're a single parent who owned a home while married. So there's some out-of-the-box scenarios that would qualify you for that. That don't just make you think of, oh, I've never bought a home before. There's some workarounds there too. And of course, there's other qualifications that could come up for different programs, and that would depend on the lender that you work with, and you would just need to get some clarification to make sure that if there was a first-time homebuyer program with your lender, that you made sure that you did, in fact, qualify for that. As you look at different options, it's important to know the most affordable home loan for you. which means taking a look at opportunities from various programs and determining what meets your needs and goals. And some of the things as you do that to take into consideration are your monthly payment. Determine what you can pay each month. Mortgage insurance, you might be required to maintain insurance on the loan, and that can get quite expensive. There are workarounds that, depending on things like how much your down payment is. So there are ways to avoid mortgage insurance. Whether the loan has fixed or adjustable rates. A fixed rate will remain the same throughout the lifetime of the loan, while adjustable rates can change and could potentially get higher. As far as an interest rate goes, the lower the better. With a home loan, rates are fairly low right now, and those keep getting predicted to jump higher and higher. So that is something to consider when you're comparing your options. And there's all kinds of loans. So knowing what types of loans are out there, the four most common are conventional, FHA, VA, and USDA. And talk with your lender about these and determine what makes the most sense for your individual profile. So your mortgage professional can guide you through those programs, but it also helps to research those on your own. And the term, most mortgage loans are 30 years, but there are shorter terms that can, in the long run, save you money and have better rates. So knowing your options, and if you have the ability to consider a 15-year loan or a 20-year loan, those are available out there. So are you really ready to buy a house? Making sure that the goal that you have is actually in your best interest. What city or neighborhood? Maybe you've got this neighborhood in mind that you love and has all the features and checks all the boxes, but it may not be in your price point. And finding an area that makes sense for you and meets the needs of you as an individual, or if you have a family to consider, but also eventually, unless you plan to live in that house forever, you'll want to, really find somewhere that you can invest in and that you can also make a profit on if you were to sell. And finding a good neighborhood and a good location is crucial to that. How will this choice impact your budget? So saving early and often is going to be extremely key in whether or not you can afford to buy a house, and if you have enough money to put down a down payment. The amount of your down payment will determine what type of loan that you can get. In some cases, your down payment can be as little as 3% or even possibly 0% for government programs. But the more you can apply towards your purchase price, the better off you're going to be. Mortgage loans with a strong equity position are very favorable to lenders and can save you unnecessary monthly expense. And different ways to think about how it'll impact your budget. You really want to have a sit down and take a look at your expenses. And if saving is something that you need to do before you make this decision, there's ways that you can do that, like setting up automatic transfers with your payroll and staying on top of your budget. And something else to consider is, do you need to maintain flexibility? Especially as you are trying to decide whether to buy a house for the first time. If you are set on a certain area or neighborhood or location, you might need to rent in the meantime so that you can wait for the right thing to come along. Also, when I talk about flexibility, if you don't see yourself living in that home for more than a year, it's probably not going to be the best option for you today. Typically, that time frame is if you see yourself living in that home for maybe more than 2 years, then it can and probably will be a good investment for you. But it doesn't mean that it's the right fit for everybody. So as you navigate this process, knowing your credit profile is extremely important. And the way you can get started with that is by making sure that you are doing actions and making choices that boost your credit. You want to make sure that you're monitoring and tracking your credit scores, because your credit score will determine whether you qualify for a mortgage and what interest rate your lender will offer you. And so some of the ways you can do that are to make sure that you pay all your bills on time and setting up automatic payments to make it effortless, so that nothing slips through the cracks. Keeping your credit utilization at less than 30%. This is a big one. If you have a credit card with $1,000 limit, then if you max that out every single month, you are utilizing more than 30% of your credit availability. So keeping that at around or less than 30% is important, because it shows the lender, it shows good on your credit score that you can manage the debt and the credit availability that you have been given, and that you don't handle that irresponsibly. Keep your balances low, but don't close old accounts. Closing accounts will increase the ratio of available credit you use, and in turn can lower your score. You want your credit history to be lengthy, and doing both of those things can bring down your average. When you are thinking about buying a house for the first time, it is not the time to go and open a new credit card. It's not the time to go and open a new loan or buy a car, because those things can impact your credit availability. So one of the ways that you can monitor your credit and continue to make sure that you're doing things to boost is to get copies of your credit report. And you can make a request for those copies for free at annualcreditreport.com. Most loan programs will require a credit score of 620 or better, but that will vary by lender. And remember that a higher credit score is going to get you a lower mortgage rate and give you more favorable loan terms. So keeping your credit in check is going to be extremely crucial. So how much house can you afford? Ideally, your debt payments, including your mortgage, should account for less than 36% of your income. Lenders will want your debt ratio to be no more than 43% of your gross monthly income. And this is really a simple calculation. You just take all of your monthly debts and compare them to your pre-tax income. Your payments, including your mortgage, will need to be no more than 43% of the income number. And monthly debts are only your credit items, such as like credit cards, auto loans, and mandated payments. General expenses such as utility bills are not going to be included in your debt picture. And once you have a projected payment, you can use things like a mortgage calculator to determine how a loan amount within your payment range will impact you. And most mortgage calculators are available through a simple Google search. Most home lenders will have some on their own website, but they're very easy to find and they can help you really determine a lot of this. You can always call a mortgage professional if you have doubts on what you might qualify for. Before you do an application, they can walk you through what all you can afford as far as what might be in your realm of possibility. And stay within your personal budget. A lender may qualify you for a higher amount than you can comfortably pay. Being reasonable with your first purchase and understand that owning a home is more than just a mortgage payment. Just because you qualify for a $300,000 home doesn't mean that that might be the best choice for you to land on that number exactly. You know what you can afford and what other expenses you have. And you also know you have to account for things like future home repairs, and there can be lots of hidden expenses when it comes to buying a home. So where do you begin? In the big picture, affording a loan for a house usually requires several categories of payments to pay back the loan. You have your down payment. You can have the flat amount that you pay up front, and you'll have monthly payments. So review your debts and what you are currently paying for housing. This prep work will take some number crunching, but it does help you find the right loan and a home within your budget. Plus, it gives you the ability to make a very quick offer. And in today's real estate environment, being able to make a quick offer and be prepared is about the only way that people are obtaining homes. It is a competitive market, and there's very little on the market, and house prices are skyrocketed. So some of the ways that you can start are, one, evaluating your debt to income and using those mortgage calculators and begin saving for a down payment. 3 would be choosing a mortgage lender. There are countless options out there, and if you do a quick Google search, you'll be overwhelmed very quickly with the amount of options that you have. My advice would be to shop around and don't just pick the first one that you come across. If you have an existing relationship with a financial institution, I would start there. But definitely, weigh out your options and make sure that you're doing your research and you choose someone that not only has a good option and fit for you, but that they understand your needs and they are willing to help you throughout the process, and that they really want to help you land on making the best choice for you. A lot of times choosing someone locally is going to be beneficial because they know the area, they know the market, and it can be someone that you begin a new financial relationship with that through this process, you learn to trust them to help you make smart choices. Finding a reputable local realtor. So choosing a good real estate agent can truly help you find your perfect home. They have access to resources and listings that you can't find through a simple internet search. So while looking at Zillow and Realtor.com will help you get an idea of what's out there, a realtor has access to so much more than you can just find online. So finding someone that knows the market and can help you navigate that is definitely important. And as a buyer, you do not have to pay them. Real estate agent commissions are paid by the home seller, so you have absolutely nothing to lose by getting that extra help. And a good agent will also negotiate your sales contract and keep the buying process on track. So they will schedule things like inspections, and they'll work with your mortgage lender for regular updates. So they take a lot of stress off of you as you would navigate that new process. It's definitely, it can't hurt. Those types of things you can really kind of look, and a lot of times you can find good reviews. There are so many options for realtors have different areas that they are specialized in. But some of the things that you can consider when you're looking for a real estate agent are things like how long they have been in the business. And how many clients they're currently working with is pretty important. Are they going to have the time to devote attention to your needs and what you are looking for? Or are they overwhelmed with clients and just trying to keep their head above water? And you can always ask for references. Realtors work with people all day, every day. So, they have probably more than enough references to help you feel good about the choice that you've made. So the next step, number 5, would be happy shopping, and may the odds ever be in your favor, because it is a challenging environment out there. And once you have found a home that you love, that real estate agent is going to help you submit an offer letter in writing, and you will find out whether your offer has been accepted by the seller or not. Typically, when you first make an offer on a home, you'll be expected to provide earnest money, which will eventually be applied to your down payment, but it's usually about 1% to 2% of the purchase price. And that money is kind of held so that they know that you are sincere about your offer. And so the last step would be to get a pre-approval letter, and basically talking with a lender and getting your pre-approval or your pre-qualification in line. You will have to have this when you're ready to make an offer on a home. And providing as much information to your lender as possible to ask for that preliminary underwriting. The more that can be verified up front, the more firm that your pre-approval can be. So in conclusion, it is better to buy something than to rent if you can, so that you can begin to build equity. Equity is something that you carry with you over your entire lifetime, and you want to build that up as you invest in a home. Buying a house is one of the biggest purchases that you're ever going to make. And so you want to feel nothing less than great about your choice, and educating yourself on the steps and the flow of the process, and lean on your lender and real estate agent for solid advice. Knowing what to expect from your initial approval all the way to the closing table is really going to help ease all of the anxiety that can come with that process. And I do want to open it up for questions now.
Awesome. Outstanding information that you have provided us. So let's start with maybe an easy question. Is there ever a perfect time to buy a home, to get a mortgage, or just depends on what you're after, what the rates are?
Yeah, I think, like I said at the beginning, you're the only one that knows if that's the perfect time for you. People will argue that now is a great time because prices of homes are only going to go up and rates are only going to go up. So it's hard to know what the future will hold with the real estate market, but you are the only one that knows if that's the best choice for you right now.
And if you do have a question, go ahead and toss it in the chat. We have some coming in. I know a lot of people were paying attention to the presentation, jotting things down. So now is your time to get these questions asked. So how is the debt to ratio income different, or how is it affected by a co-borrower borrower or a co-signer? Is it affected by that?
Yeah, so if you have someone other than yourself that is going to be co-signing on the loan, then their income is accounted into that mix as well. So if you have a spouse, unless they have a negative credit impact on your possibilities of getting the loan that you want, their income certainly can help with that debt to income ratio. Mm-hmm.
So people you often hear about, they become house poor. You know, they just can't afford the house because they bit off more than they can chew. Is there a rule of thumb to consider to ensure that you have an appropriate amount of savings, or there's a nice debt to income ratio cushion so you're not eating ramen all the time? Or is it, again, kind of on a case by case basis?
Yeah, some of that is case by case. And that goes back to, if you just because you're approved for a certain amount does not mean that might be the best choice for you to make. And knowing and giving yourself a cushion ahead of time when you know what you can afford, you know what your other expenses are outside of just your credit card payment or your auto loan, and what your potential mortgage payment would be. You may have an enormous amount of other expenses that you have to account for, because if you fail to do that, you will wind up spending all your money on this mortgage payment and not having anything left over. So
the housing market is hot. I mean, you can go one day and that house is off the market. It happened to my dad a couple of years ago when he was buying, and it's still the case today. Now, it depends where you're living, but how can I be ready, or how can we be ready to jump and purchase a home on the spot if you fall in love with the home? How far in advance do I have to be meeting with a mortgage professional so I can ensure that I'm ready and everything's in line to purchase that house?
Yeah, I've got quite a number of friends who have been trying to purchase a home for probably the last 6 months, and it is extremely competitive. If you think that that's in the realm of possibility for you, then going ahead and getting an idea and getting that pre-approval letter is crucial. You can make an offer at any time, and whether or not you have the pre-approval letter or the down payment to actually go through with the loan, or the earnest money to put that 1% to 2% down with your offer, I want to say it's a lot easier than it is, but it's not. There are some crazy things there, so that there's a personal touch, as the seller might consider something like that. But it is very difficult to just be ready, and then to also just get the house that you want when you want it.
To get that pre-approval letter, does it take a day? Does it take 2 days? What can people kind of expect? And it probably depends on the institution you're working with.
It does. I would say to get that pre-approval letter, that is dependent on having that conversation with the lender on what your current situation looks like. They want to make sure that you are being open and honest about your current scenario, so that they feel comfortable about pre-approving you for whatever that amount is. I know, at least with us, it doesn't take but a few days, but that also depends on how backed up each area is. So,
and in a hot housing market, you never know. So, with apartment rates going up, is it best to look into home buying, considering all of the notes being given, everything that you've provided today?
Yeah, it's kind of a lose-lose, honestly, because apartment rent is skyrocketing, home prices are skyrocketing. If you feel like you're in a location where you're not going to be moving anytime soon, then moving out of that city or area, then purchasing something is definitely going to benefit you more, because you're going to be building equity. Every payment that you make is money that you are investing into that house. So the money that you're putting towards rent, you're never, ever going to see that again. It will never come back to you in any way. So there are benefits, certainly if your rent becomes high. Typically, depending on how much you can put down on a home loan, you can really reduce that amount monthly.
When it comes to debt to income ratio, student loans, are they included?
They are, but I know if you choose, it depends on the lender that you choose as well. If you choose somebody local who knows kind of your history and maybe you have a relationship with or can begin one, things like student loans and medical debt don't typically weigh as heavily as some of the other things do.
For first-time home buyers, would you recommend down payment assistance programs or even state programs?
If that's what you have to find in order to make that a reality for you, I think that obviously makes sense. If there's ways to avoid that, I think that's possible. But there are so many assistant programs out there that can help you. So being smart about them and doing your research can definitely help you out. And there might be a program out there that can help you do that.
These are fantastic questions rolling in from the audience. So going back to pre-approval, how long is a pre-approval good for? With the current housing market, this person knows that finding a home can be especially lengthy. Does it expire? And would that negatively impact you in the process?
There's something that you find that is outside of that, or you feel like maybe you got a raise in your job or something changed in that time frame, then you would definitely want to go back and have another conversation and readjust that.
What does mortgage renegotiation and negotiation in general look like?
Renegotiation? I'm not sure.
And maybe that's one we can take to one of the mortgage specialists and send out back to Tom tomorrow, possibly with an answer if you don't have an answer to that.
Yeah, I think maybe that's intended to say negotiating what type of mortgage that you get or qualify for. And if that's the case, yeah, that's a question I'll be happy to kind of refer to our mortgage department on too.
Okay. So when it comes to moving to a new location for a job, do you have an opinion on renting for a period of time to become more familiar with the area prior to purchasing a home immediately in that location?
That to me is where finding a good local realtor can come into play, because it's not a terrible idea, but I personally have moved several times and it is not a fun process. And even if you don't have a lot of stuff to move with you, just the process of moving more than one time in a short time frame just is not ultra desirable. But I would say that you could, if it's a new area, you could very much lean on a realtor who knows the area, can tell you things like if there's, a good coffee shop around the corner, or if things are in walkable distance, or what the school systems are like, and give you a good idea of where you might fit in that new area.
So can you explain a little bit what a refinancing may do? Obviously, it's not first-time home buyer necessarily, but it could happen early in the process.
Yeah, and so there's a lot of scenarios where if you think after you've purchased a home that you could qualify for a better rate, or the value of your home has significantly increased, you can consider a refinance to get that better rate and maybe lower your payment, or benefit from the value of your home increasing.
And keep those questions going. We still have a few that we haven't touched on quite yet. This person's always been told that you need to have a 20% down payment, but it seems like that might not be the case anymore. Is that true? What are the thoughts?
Yeah, so the kind of rule of thumb with the 20% down payment is that if you put down more than 20%, you can avoid private mortgage insurance. So you'll hear PMI when it comes to that 20% down payment. There's some exceptions to that in different mortgage lenders. Some will kind of avoid PMI at less than 20% of a down payment, but that's pretty standard, and percent of whatever kind of home that you want to purchase.
Seems to be a lot of cash offers these days. Can you expand on what a cash offer it is and if you can compete traditionally getting a mortgage?
Yeah, so I think what's happening is there's people who are selling their homes and receiving all their equity, and they're getting the money from their home. And then they are basically sitting there waiting to purchase a new home. And so they've got everything lined up. They have plenty of the equity and assets to do that in a timely manner. The thing is from a seller's perspective, whether it's a cash offer or not really doesn't matter. It sounds nice, and a lot of times you'll find in the competitive market that there is today that people will make a cash offer without even having seen the home. They'll make a cash offer without an inspection contingency. And if you are in a place where you can do that, that's great, but it is not always the smartest choice to make. And, you know, I don't know. I don't know that many people that can just go out and buy a home with cash. I mean, I know it happens, but I don't know very many of those people. So
is it better to make a larger down payment, pay off the mortgage ASP, or if you're planning to sell eventually, pay the minimum payments?
yeah, so it is, if you can put down 20% or more, that is beneficial to you because you will pay less over the lifetime of the loan and avoid private mortgage insurance. Can you repeat the second part of the question, Greg?
I sure can. So basically it's make a large down payment, or if you're planning to sell eventually, just pay the minimum payments that come along.
Yeah, I would say if you think that you'll be moving probably within 2 years, it's not going to make significant enough of a difference if you pay that much more on the loan monthly than if you were to stay in that home for a very long time. You might consider doing like a 15-year term instead of a 30-year term. If your goal and your financial goal is to have no debt or pay that debt off faster and quicker, then that might be the best route.
Leia, this has been fantastic information. Great questions from today's audience. We truly appreciate your time and spending it with us, talking about first-time home ownership and kind of going through the whole process. Another question that came through: what are your thoughts on making double payments versus getting a shorter loan term? So a 15-year versus 30. So double payments, is that an option?
You'll have to talk with your lender because some mortgage lenders will allow that and others might not. So there are benefits to cutting the interest that accrues over the lifetime of the loan if you make more frequent payments. But that will depend on whether your lender accepts that and actually adjusts that.
And just as I was winding down, we're starting to get more questions in. So on average, how much more does PMI add to your monthly payments? Is it substantial?
It really depends on how much your loan is and what percent of interest that you're already paying on that loan. It can vary very, very much. And some of that's part of that conversation that you can have with a mortgage lender. You can ask if I put down less than 20% over the lifetime of the loan, how much PMI will I actually be paying? It can be very significant.
You on once again.
Thank you so much. Thanks, everybody.
You're so welcome. And if you missed anything, if you're in the audience and you'd like to go back and take a look at our presentation, we will have a recording of it online starting for sure tomorrow, hopefully this afternoon. We have one last Backpacks to Briefcases event this spring. Be sure to join us next Wednesday to continue earning credit toward an evergreen certificate. On May 11th, don't miss another Lunch and Learn interview skills. This rescheduled webinar will explore the important skills needed to effectively communicate who you are and what you can contribute to a company if hired. Meanwhile, we also have plenty of other virtual offerings for you. On Thursday, May 19th, discover what makes something funny or why laughing makes us feel better during comedy. Just Say Yes with Dr. Kevin Fontaine. Then on Tuesday, June 7th, join Riley Thornton, UAB's Employee Wellness Manager, for no-nonsense nutrition as we find ways to make sure we're eating a balanced diet without breaking our budget and maybe getting more money for that down payment for a home. And on Thursday, September 22nd, we'll be hosting Blockchain and Web 3.0. During this webinar, we'll take a look at we really need to know about cryptocurrencies like Bitcoin with Dr. Christopher Edmonds and Dr. Mark Edmonds. All of our events can be found online at alumni.uab.edu/events. Take a listen to the UAB Green Untitled podcast. Through this podcast, we get introduced to members of the UAB community, find out what made their experience unique and what led to their success. Coming up on Monday, we'll be releasing one on Alexander Shannara. Yes, the billboard guy, the lawyer. So listen into that one. UAB Green Untitled can be downloaded on Spotify, the Apple Podcast app, and our website. And be sure to stay on top of all things alumni on social media. You can look us up by searching UAB Alumni on Facebook, Instagram, and Twitter. On LinkedIn, search Alumni Career Community. We'd love to know what your thoughts are about today's session. On your screen is a QR code to a short survey. Please take a few moments and give us feedback and let us know your thoughts. Once again, thank you all for joining us for today's discussion with Leia Ragland. Have a great afternoon. And as always, go Blazers.